Welcome back to Mind Portfolio Lab. This is the next video in the individual EA overview series. In the previous videos, I looked at a previous day level component, a structure-based component, a session-based component, and a confirmation-based component. In this video, I'm moving on to another system in the portfolio, which I'm going to describe at a high level as a short-term momentum EA. Internally, this is the EA I refer to as Carnage. As always, I'm going to keep this deliberately high level. I will not be sharing source code, exact settings, exact entry rules, filters, stop logic, target logic, or trade management rules. The aim is not to give away the system or provide trade signals. The aim is to explain what role this EA plays in the wider portfolio, what type of behavior it is designed around, and what I monitor over time. At portfolio level, this EA gives me exposure to short-term directional movement. What I mean by that is that the system is designed around situations where the market starts to move with enough short-term strength to justify a trade. It is not trying to capture multi-day structure. It is not trying to hold for a long time. Its role is much more focused on quicker intraday movement. I am deliberately not going into the precise trigger logic, because that is part of the system itself. But in broad terms, this is a shorter hold momentum component. That makes it different from several of the systems I have covered already. The previous day level EA was based around daily reference levels. The structure-based EA had a broader market structure role. The session-based EA was tied to behavior around a defined market window. The confirmation-based EA was more selective and waited for multiple conditions to align. This EA adds something different again: shorter-term momentum behavior. That matters because a portfolio should not rely on only one type of trade. Some strategies hold for hours or days. Some wait for very selective confirmation. Some trade around levels or structure. This one gives the portfolio exposure to quicker movement and a shorter average holding profile. That can be useful, but it also needs to be understood properly. Short-term does not mean low risk. It simply means the risk is expressed differently. A shorter hold EA may have less exposure to overnight risk than a longer hold system, but it can be more sensitive to spread, execution, slippage, short-term noise, and sudden reversals. So I do not think of this as a safer EA just because it tends to hold for less time. I think of it as a different type of component. This type of system can perform better when there is clear short-term directional movement. If the market moves cleanly after the setup appears, and if the trade has enough room to develop, the EA has a better chance of doing what it is designed to do. It can also suit conditions where the trade resolves relatively quickly. That is the kind of rhythm I would expect from this component. Where it can struggle is in choppy short-term movement. If price keeps starting to move and then immediately reversing, that can be difficult. Low volatility conditions can also be a problem, because there may not be enough movement for the trade to develop properly. And because this is a faster style of EA, poor execution or spread sensitivity can matter more than it might with a much slower strategy. So again, this is not a system that should be judged trade by trade. A single win does not prove it works. A single loss does not mean it is broken. The better question is whether the system continues to behave in a recognizable way over time. The uploaded backtest is useful here, but I am not treating it as proof. It gives me context about the system's character. In this test, the EA has 36 trades. The win rate is 75%. The average position holding time is around 34 minutes and 48 seconds, and the maximum holding time is around 3 hours 13 minutes and 28 seconds. That tells me a few important things. First, this is a much shorter hold component than some of the other EAs in the portfolio. Second, the trade sample is smaller than several of the other systems, so I need to be careful not to overstate it. And third, while the historical win rate is high, I do not want to treat that as a guarantee. A high win rate can look attractive, but it is not enough on its own. I still need to understand drawdown, average loss, position sizing, execution, and whether the live behavior remains close to the tested profile. That is why I try to focus on behavior rather than headline numbers. At portfolio level, the role of this EA is to add a short-term momentum component. It is different from the other systems because of the speed of the trades and the holding profile. That gives the portfolio another type of exposure. It also means I need to monitor it differently. For example, I care about whether live trades are still resolving in a similar way. I care about whether the holding time remains broadly recognizable. I care about whether the system becomes vulnerable during low volatility or choppy periods. I also care about whether the sample size is large enough before making any judgment. With a strategy that has fewer trades, it can be very easy to overreact. A small run of wins can make it look better than it is. A small run of losses can make it look worse than it is. So the discipline is to monitor the behavior, but not overinterpret too quickly. When I monitor this EA live, there are a few things I care about most. First, is it still taking the kind of short-term momentum trades I expect? Second, Are the losing periods within a normal range for the system? Third, does the live holding time remain short and recognizable? Fourth, is the trade sample large enough before judging the system? And fifth, is it becoming too correlated with other systems during drawdown? Those questions matter more than any individual trade. I do not want to react emotionally to one outcome. I want to judge the EA by its behavior over time and by whether it still has a clear role in the portfolio. So, to summarize, this EA is a short-term momentum component in the portfolio. It is designed around quicker intraday movement and has a much shorter holding profile than several of the other systems. It has encouraging historical results, but the trade sample is smaller, so I am careful not to overstate it. The backtest is useful context, but it is not proof. For me, the important question is whether the system continues to behave live in a way that makes sense, and whether it adds a distinct contribution to the portfolio. This is not about finding one perfect EA. It is about building a portfolio where each system has a reason for being included. In the next video, I'll move on to another EA and go through the same process. What it is designed to capture, when it may perform better, when it may struggle, and why it belongs in the wider portfolio.